Hi, I'm Ann DePlessis, Senior Vice President at Liberty Bank and Trust, and I'd like to welcome all of you to, I think this is our third webinar on really focused on building wealth in our community and having a little bit of understanding about your financial wealth. Today we're going to talk about building your dreams, building your goals. We want to focus a little bit on our entrepreneurs, on our small business community, because as you know, a small business is really one of the many ways, not many, but one of the ways that we can begin to build wealth and leave legacies for our children and for our families. So today, just before we get started, I want to just get some housekeeping. We have a very special offer at the end, so you got to stay all the way to the end. You can't leave us to get a special offer. And if you have any questions, if you want us to address anything, of course, you can use your chat box. And so I'll be kind of trying to figure out how to look at you and look at the chat box all at the same time. But I want to begin by welcoming somebody that most of you may know. If not, Ronald Correa has been with Liberty Bank for quite a while. He is our rising star. He has really risen, but and he is Vice President of Development. And Ronald, you want to just say hello to everybody and
well, good
tell
morning,
a little bit about yourself?
Good morning, and thank you, Mr. Plessis. I appreciate it. My name is Ronald Correa. I have the title of Vice President of Development at Liberty Bank and Trust. I started at the bank 13 years ago in our mortgage division, and I also work within our commercial division. In addition, I get the opportunity to represent Liberty Bank and Trust throughout the state of Louisiana on various boards and commissions.
So Ronald, as he said, he really is someone that really has been able to work with our business community, small business community, in many ways, but primarily in helping them decipher all of the many issues and concerns with growing your business and getting financing for that growth. So, you know, one of the things that when we meet with entrepreneurs, especially small business people who have not really had the need to seek real bank finance to grow a business. And there's this idea that, you know, I know kind of what I need when I go to a bank for a mortgage loan or, you know, for a regular personal loan. And so the thought is, well, if I can get a regular personal loan, then I should be able to get a business loan. What are your thoughts?
It's not quite as simple as that, and I think that's one of the things that we do try to educate our customers on. You know, it's really apples and oranges in terms of how we look at and underwrite traditional consumer lending, whether it be for a purchase of a mortgage, a vacation loan, or some other consumer purpose, as opposed to on the commercial side. Certainly we look at the individuals involved. We look at the experience. How long has the business been up and running? In addition to the same financial criteria we look at on the consumer side, but we also spend more time and due diligence on the actual business itself, its viability, and then also the documentation, financial documentation in particular, the integrity of those financials, and that's something that's critical.
You know, when you say we look at the business, I mean, it's different. It's two separate things, right?
Yes, ma'am.
Me personally, I may have great credit, right, and I'm able to pay my bills. But when I'm looking at that business, you first look at that business's history, right? I mean, so, you know, if a business can't, when you look at financials, and we'll talk a little bit further down about financials, but when you look at those financial statements, you're looking at that separate and apart from their personal stuff.
Absolutely. And what it is, too, when you look at individuals' financial statements, you know, essentially they can have various income sources. We always start with the entity that borrow for the transaction, that business. We look at the history, we look at the revenues, we look at the expenditures, we look at how profitable it's been over time. We also look at the business's balance sheet to see how it's positioned and how sustainable it is, and are they positioned for growth. And that's one of the discussions that you're going to have with your lender. And I think another misnomer, as we talked about, people not understanding completely the difference between personal finances and personal loans versus commercial lending, is that when you are identifying lenders on the commercial side, people have this expectation that the lender will have all the answers. In my opinion, I think what happens is a good commercial lender will have all the right questions to ask, because everybody's goals and objectives are different. Some people are looking to grow wealth and equity within the business, maybe transition or transfer it on to the heirs or the children and to be a legacy. Others are looking solely for profitability and also the term and how tolerant they are to risk.
Right. You know, I think that word risk is very important for us to understand, because you know, when people come to us to talk about their dreams or talk about finance and the growth of their business, they really can't understand what our definition, or not really ours from the bank personally, but the industry, financial, you know, what do regulators determine risk to be, right? And part of risk from a bank's perspective is not knowing. Remember, we are bankers, right? We see various businesses, but you know the business. You understand what's going to make that business tick. We don't. You have to position yourself in many ways through what the numbers say on your financial statement, as well as what the relationship that I have with you, that I know that you're going to pay me back. And I mean, I think
yes,
you want to talk about relationship. I mean, that's
absolutely, you know, and even in the beginning of the relationship, what I've asked individuals to do in the past, and various discussions, something similar to this, is that when you go in and you apply for a loan on the business side, in a way you almost want to think about it like a job application or interview or what have you, because you're selling yourself, because you are essentially the business. You want that lender, that financial institution to feel comfortable with your comprehension of the business, that you really understand it, the ebbs and flows, and also when you're having that discussion, what your plan is for the business. And that's something that the lender won't know. They can't make an assumption that everybody wants the same thing.
You know, relationship really, I don't want to underestimate or emphasize how important that is, because, you know, when you think about another idea of risk, and that is integrity, you know, we look at folk and we see that, you know, we've banked them for quite a while. We know that they're going to make good on whatever, you know, history and tenure with the bank. So I just, you know, don't want to underscore the importance of sitting down, and even if you don't even need money right now, if you own a business, or even thinking about growing your business, and before you really need money, it's a good idea to call your banker. You know, call Ronald and say, look, Ronald, I just want to come and sit down and maybe have a Zoom conversation.
Yes, very popular these days.
Have a Zoom meeting with you, and I just want to talk about some thoughts that I was having. And at that point, you begin to develop this understanding of the plans. And at that point, your banker can tell you, look, I think you might want to rethink that, or that's a good idea.
Absolutely. So, you know, we joke amongst the lenders, really it's one of the best free consultations you can receive is having a discussion with the lender and present an idea. They're going to give you feedback that you can utilize to help plan and move forward accordingly. They're being mindful of what they may see in industry trends, because they get reports from various financial institutions as far as in terms of performance. They also usually have a good pulse of what's going on locally within the community and know what will be more likely to be viable or not.
You know what, you know, kind of getting away from the relationship piece, which is, again, very critical, but we got a lot of folk that come to us and they have a job and they got a sidekick, right? And they come to us often and say, I'm going to quit my job so that I can do my business full time.
Well, and that's a good thing, but you know what we typically suggest is you typically want to work your way out of a job. So if you're employed, you have wages, everything's pretty stable, and you're growing your business, you have a track record. Well, you know, we've seen people that have really been most successful, they stop working that job when they're losing more money by not being at their business. And so that's something that's critical. And timing, like anything, is always important part of any process to think about, is this the right time for me to make this decision and transition fully to my business as opposed to my employment?
I have a question. I have someone that says, what if you have a new business? I mean, how do we look at new businesses. Ronald, you want to take that one?
So in new businesses, I can tell you there's some subjectivity. In most cases, you'll find financial institutions look for a business to have a minimum of a 3-year history. Now, there may be some instances where they'll consider a business that doesn't have quite 3 years, but if an individual has other repayment sources, if they're going to guarantee personally and they still have wages from their employer, or if they have another line of business and revenue that can support that business until it stabilizes independently. So, and again, that's part of the discussion that you have with your banker and your financial institution about timing. And there might be some instances too where, you may be able to obtain funding or capital needed from your business, but it may not come from a bank. It may come from a CDFI, like a New Corp is an entity that is able to provide that support and guidance. The state has several organizations. The Urban League has some programming as well that can assist individuals that are trying to really transition and grow their businesses until they may be bankable.
I think that, especially when we get into this discussion about, startups or new businesses, and we really don't want to sugarcoat that either, because it's not easy if you are a startup. And oftentimes, we like to kid around here that, people will go, or entrepreneurs who bank with us and who don't bank with us will go to every other bank in the city and get turned down for the very same reason, and come because they're startup and all of the risks that are associated with startups, and they'll come to Liberty and say, what, you didn't, can't you help a brother out?
Oh, well, absolutely. And Mr. Cousins, that is very common. And one of the things we have to remind people is that we're regulated like any other financial institution. We have to underwrite to the same guidelines, demonstrate the ability to repay. What I find as different with Liberty Bank versus maybe some of the others that may not be able to support you at the time, we still spend a lot of time with individuals, maybe giving a little bit more insight in terms of what they need in order to become bankable. And so, we also look at our relationship with those individuals. To your earlier point, sometimes when, how soon we can help them, and how they perform, maybe even on personal transactions when we assess who can assist.
I have another question from our audience, and keep them coming, guys. This is some good questions. It says, what if you have a vision but no capital to start or any financial support? Well, keep your day job. No.
We're never any entity that will take people's visions or dreams lightly. What we try to do is be practical and informative. And with a lot of businesses that grow, this is not always an option that's available to people within our community, but usually, you get support from family and friends. That support may come from an investment, it may come from an angel fund. We've seen a little bit more of a startup community develop within New Orleans. But the other thing that happens as well is, sometimes those family and friends, they might serve as a guarantor for the loan or the debt and say that, if for whatever reason things don't work out, they'll be responsible for making sure it's repaid accordingly.
Yeah, I think that's important to note. There are times when, we have to understand how to collaborate and how to create partnerships. When you don't have everything that you need at the time, but have a good vision, and a vision that probably can at some point be profitable. So again, that's a prime time to really come and sit and talk to a banker, right? And say, look, I have a vision, I have no money, but we can, I'm not going to say that we can always help you, but we can guide you. We can give you some thoughts, go through a thought process that allows you to say, okay, here is a path that I can take. It may not be as immediate as I want it to be, or it may not be my original concept of how I wanted to start my business, but it is a start. And so, this idea of collaboration, this idea of looking at perhaps angel investors or family investors or partnerships, right?
Oh,
a strong partner with a buyout at the end of some term can also be an option.
That is certainly an option. And again, I think that those organizations that are in place that not only have the expertise, can provide technical support needed, but they usually have access to resources and individuals and or funds that are looking at investing in startups. And what happens, and maybe within that window you become bankable because you develop a history and a pattern, and then a bank can underwrite, and that's very common.
I want to spend a little bit more time. We kind of alluded to financial statements and your balance sheets and all at the beginning, but I want to spend some time talking about financial statements. And so there, I think two or actually three primary financial statements that we look at. And each one tells its own story. But each one, apart from the other, doesn't tell the complete story. So Ronald, can you talk to us about those three, two or three primary financial statements that we really look at, and what we're looking at when we get it?
Absolutely. So, typically you'll see a minimum. Financial institution will want to see tax returns. Historically, they want to see at least 3 years or what have you, because within that 3-year period, you also start to pick up the trends for the entity. Are revenues growing? Is profitability growing at the same rate? We'll ask to see a profit and loss statement, which is going to typically capture that period of time outside of the tax return. So, right now, individuals may have their 2019 tax returns available, but that interim profit and loss statement is going to give us a sense of how the business is performing in this year, especially in light of the pandemic. Everybody wants to get a sense of how organizations or businesses responded in light of, some have really, been able to grow and continue to perform. Others have had some downturns, or they might have had a slowdown in the interim and then recovered. And then the other is the balance sheet. The balance sheet is going to give us a sense of, that entity's working capital, the liabilities and debt that's still out there. And then there's some level of reconciliation that we do in monitoring the three to make sure they make sense and kind of tie together. It's unfortunately one of the things we hear commonly is when individuals apply, well, my tax returns may say this, but I really make that. Well, a financial institution is going to have to go with what's on the tax returns. That's one of the things that we look at. You made the comment earlier, I think you said, about giving a hookup or something like that. We can't. We have to use the documents to govern us as well, just like any other bank.
Yeah, we have a question. Does Liberty see future involvement in microlending as a means to help connect other folks in the community who have resources that might be able to fund startups, the gateway to bankability? And actually, we work with many different non-bank institutions, nonprofits. I mean, you mentioned one,
New Corporate.
There are many other CDFIs that we collaborate with, for people who are in a startup stage, because again, we are under a certain set of regulatory guidelines, right? And some of the entities that we collaborate with that can do microlending, these the nonprofits, CDFIs, community. For those who don't know what a CDFI is, it's a community development financial institution. They're able to do things a little bit more with a little bit more flexibility.
Absolutely, and one of the things that I think about with the bank, and because of the bank's history and being involved, so entrenched not just in New Orleans but nationally as a community bank and representing the interests of African Americans and other minorities, what we've seen is that we typically not just on the cutting edge, but usually the leadership of the bank, Mr. McDonald, our president, our chairman, they're part of the discussions even at the national level that will really trigger how things move forward. And that ultimately benefits not just the bank, our customers, and the communities in which we serve.
I think that's really important. I know that you've probably had some really good stories of customers that you've helped in situations like that, or?
Absolutely, and there's one gentleman that comes to mind, and when he came in early on, he was having some financial challenges. He had a relatively small request, but he had been with the bank for a long time, and he just needed a chance. He had received a contract from a government entity, and I think it was roughly $30,000 or so. And I'm happy to look back at that gentleman. Every time he calls, I get excited because, been 4 or 5 years later now, he's being solicited and having opportunities of contracts with municipalities in excess of $400,000 or $500,000 per contract. Wow. So what that's done for his business in terms of how he's grown, he's also diversified. But to see just his financial statements change, his personal financial statement change over time. And it's really going to do well for him, the individuals he's serving, and also his family, because he's bringing his children into the business now as well.
Nice. I mean, that really is what we do, what it's all about. Really building that trust between the banker, building the relationship. As you say, he had been with the bank for quite a while, and so there becomes, again, that kinship that, we understand what you're trying to do. We're going to guide you through your growth. It may not come as fast. We may not do everything you want us to do, but we really are a partner, and that's how we like to look at our customers. This is the last thing I want to because we're kind of winding down, but the last thing I want to really touch on a bit are our customers, are our friends who all of a sudden become flippers. They want to invest in real estate, and they've never owned a home, and yet they think that they can flip a house, right?
Oh,
Let's talk about that. I mean, we get a lot of people who think that there's some quick and fast money in investing in real estate to flip and make a quick profit.
Absolutely, and the old adage, if it looks too good to be true, it usually is.
Yeah.
And with anybody, again, we go back to that risk tolerance, and some individuals have done quite well with purchasing, renovating, and improving real estate, reselling at a profit, and that's advantageous for them. But they usually have a skill set. The ones that I've seen that do the best, they usually have a team that's already in place that goes, from the real estate agent that they're using to the contract that they're using consistently, having a good sense of the market that they're obtaining the real estate in, and then reselling, and that's important. One other thing you were mentioning before about, kind of tying this all back together. When you apply for a loan to a bank, and early on in my career, I had a hard time. I really didn't like to turning people down for anything. I always wanted to figure out a way to help them. And two of my colleagues that were here at the time, extremely supportive, made me understand that when banks turn you down, they're really doing you a favor based upon historic financials, trends, and what they've seen. When they say no, they really are protecting you. If it's viable, a bank will want to finance it because they're ultimately benefit as well.
That really is a good comment that you're making. People don't realize that the way we make money, oftentimes when we're out talking to folk in the community, they're like, we're going to put a deposit in, and we're going to bring millions of dollars deposits, and we're like, that's wonderful.
Mm-hmm.
But when you bring, we need deposits, right?
Mm-hmm.
We want
Absolutely.
to develop, that's part of the relationship building, right?
Mm-hmm.
But when you bring that deposit to us, in many cases, we have to pay you for that money. So, but when you borrow money from us, you pay us. And so there's a happy medium, place in the middle where the money, the difference is what we use to operate. And so this whole idea that banks don't want to lend. If we don't lend, we're out of business. So we have to find a way to lend, but to lend using good, sound information and judgment, not only really to, I guess, protect the bank, but it's also to protect the customer, from all of the repercussions from doing a loan where a customer really couldn't afford it.
Oh, absolutely. I'm saying that's an important point of anything. And I mean, our president always mentions about doing well and doing good. And, part of doing good is also informing people about why you can't do it at that time, so that they have that clear understanding about how to position themselves for the future, or even how to vet projects or investments for themselves in the future. We really want them to leave out of here after they meet with us or do business with us with a better comprehension of the business and also what banks are looking for, because ultimately that's going to benefit them as well.
And one of the things when you say what banks are looking for, I guess when you get a customer and it's new to you, what's the first question you ask that customer about their banking relationships?
Oh, do you bank with us?
Where do you bank? Oh, have you been to your bank for this long?
Absolutely, and it's funny. We had with the YBC years back, we had a running joke. It's like,
you got YBC.
Yeah, Young Bankers Committee. We would talk about a lot of things in banking as we were being groomed for leadership positions, and we had this saying: if you don't bank with us, you bank against us.
Yeah.
And, so with that, when you look at individuals or entities, they want to borrow your money, but then they may not want to have that deposit relationship. Usually it's like a marriage. It's good and bad, give and take, and you kind of have to be completely vested.
And so when we go back to, remember I told you guys, it's like the school teacher. We're gonna go back to that relationship word, right? That relationship is a total. I mean, you have asked your banking institution to entrust in you and invest in your future, invest in your business, right? And what we're saying is we want you to also invest in us, right? And that means if you care enough about wanting to borrow money from us and care enough about wanting to put your deposit relationships with us.
Oh,
So
absolutely.
that really does work in tandem, you know, with the complete relationship. So I have someone who asked about wanting to get, how do we get a business credit card? Well, that's like perfect segue. You know, traditional financing your business, building relationships with the bank, and especially a community bank. You know, I don't like to call us a small community bank because we're not. We're in, just for those of you who don't know, you know, we're in 10 states. We just had an acquisition in Kentucky. We're in Houston, we're in Dallas now, we're in Kansas, we're in Mississippi, we're in Chicago, we're in Detroit, so let's see, Alabama,
Yes.
Baton Rouge, and so, and we're actually all over the world because of our online resources. You can open an account with us online, you can apply for a consumer loan online, but we wanted to give you a very special offer for those of you who stayed through. We believe that one of the many ways that you can begin to be a part of our Liberty family is not only through a checking account or a savings account or applying for a personal or business loan, but also applying for a credit card. We have the lowest, I believe, credit card rates, I think, you know, that you can find. Fixed rates, but we have a very special offer. Now, I'm not going to tell you what that special offer is right now, but I can tell you, if you really want to begin a relationship with the bank, not only that, I can tell you the rates are excellent, and the offer that we're going to give you is phenomenal. But you can go, you can take debt that you have, high interest debt. As a small business, you may have used your credit cards in the past to help fund your business. As you may be thinking, okay, I'm ready to grow my business or flip from my job to my side hustle, right? And I need to pay down some debt or at least get my interest expense down. Then an option or thought is to use a low interest business visa. It begins to build business credit. And so our offer, in order to take advantage of it, we're going to ask you to go to libertybank.net/offers, OFFERS. There is a very, very, very short little form that just asks for your business name, your contact information, your email, and your telephone number. And you click submit, and within 24 hours, someone will be contacting you to talk to you about our special offer for a business Visa card, and I promise you, you are going to be sorry if you don't do this because it's a really, really a great, great rate. So Ronald, any parting words for our viewers?
I just want to thank you for this opportunity to share. Those of you tuning in or what have you, we hope at some point you'll give us the opportunity to do some business with you. And even if you're not ready now, like Mr. Plessis said, it's always a good time to go and have a discussion with your banker about potential deals or transactions as you attempt to grow your business.
Well, listen, this has been really nice. I enjoyed it. I mean, there's a lot of good information that was shared. We only have a certain amount of time, and there's so much more that we could have talked about, but we are very thankful that you did spend some time with us today. Keep an eye out on future webinars, and you know, this has been good. We are excited about an opportunity to meet you, and please go to that website, libertybank.net/offers, and submit your information, and we will be contacting you. So thank you, and God bless, and have a great rest of your day.
Okay.
Okay.
All right. Yeah, I hope you get a lot of offers.
Are we okay? Are we over?